Hi everybody, my name is John Stephenson, and today I'd love to talk to you about the decade of decline. You know, as we look back over the last 10 years, it's really striking all the things that have happened over the last 10 years in America. We started off the last 10 years with two world-beating industries. There was Silicon Valley, which had the promise of technology. Everybody was becoming a billionaire in Silicon Valley, and seemingly every week. But by the end of 2000, Silicon Valley had turned into Death Valley. And then, of course, there was Wall Street and highfalutin finance. And everybody thought that this was the next coming as well. Both those industries grew very, very rapidly. They weren't something that the World Trade Organization was overly interested in regulating. And not only that, but they were things that were easy to open up an office in London or in Moscow and just send a few bankers and have it grow. By the end of 2007, the S&P 500 earnings, 40% were contributed by the financials. That's a staggering amount. Historically, it's been closer to 15%. So the contributions to financials were huge, and they were the leadership group on the S&P 500 for most of the last 6 or 7 years. Unfortunately, as we move forward, the S&P 500 really doesn't have a leadership group. The only one you can think of is pharmaceutical industry, which has had great profitability. But with the recent passage of the Obama healthcare legislation and rumblings out of Congress, it's hard to see how that can retain its leadership. And so it looks like the upcoming decade will be a terrible decade for investors going forward in America. I think the S&P 500 will underperform most other stock markets around the world, and that will be bad news for American investors. But if that was bad news, consider what has just happened. Over the last 10 years, the S&P 500 has lost 0.5% a year, each and every single year. In fact, this last decade marks the worst decade in over 200 years of recorded stock market history. You would have been better off to throw your money under the mattress, or if you were smart enough to buy gold companies or gold itself. That would have been a stellar investment. Going forward, the stock market in America will underperform. It just simply isn't where the action is. Our stock market capitalization has fallen from $15.1 trillion to $13.7 trillion. And meanwhile, a country that 10 years ago we wrote off as just having cheap labor, China, its stock market capitalization has gone from $581 billion all the way up to $3.2 trillion. Well, it's still not the size of America. It's closing awfully darn fast. The future for American companies does not look bright. And unfortunately for American investors, the best investment alternatives will be somewhere outside of America. They'll largely be in commodities, and we're going to return to an era very similar to the 70s from an investment perspective. To learn more about this, you can read more about this in my upcoming book, The Little Book of Commodity Investments, to be published in June 2010 by John Wiley & Sons. Thank you very much.